Markets do not wait for politicians to settle in. They react instantly. And every new US president has faced a market response, whether that was good, potentially disastrous. And right now in 2025, we're seeing one of the worst 50-day post-inauguration drops in recent history. Let's take a data-driven look at how markets have historically responded to new presidents and why Trump's second term is off to a rocky start. So to get a better picture, I've analyzed how the S&P 500 formed in the first 50 days after each of the last 10 US presidents took office. And here's what I found. The biggest post-inauguration market drop was George W. Bush in 2001, with a 16.61% decline as the dot-com bubble burst. That was bad times. The strongest gain, Joe Biden in 2021, with a 9.38% increase, fueled by pandemic recovery and stimulus measures. Trump in 2017, a modest gain, 3.34%, in what some could be saying is a bullish market. But fast forward to today, Donald Trump in 2025, a 7.32% decline, and it's only been 50 days. What's actually happening? And the last time we saw a comparable drop, Gerald Ford in 1974, when the market fell just over 6%. But even that wasn't as severe as what we're seeing right now and today. Now, unlike in 2017, Trump's second term has started with market turmoil. And here's why. The big word of the day, tariffs, tariff uncertainty. And that is not great because markets hate uncertainty, and the back and forth on new tariffs has investors very nervous. And we've had a 3-week sell-off. The S&P 500 has shed 8.7% from its all-time high, while the Nasdaq is down nearly 14%. And unsurprisingly, tech stocks are therefore getting hit hard, with magnificent 7 stocks like Tesla, Nvidia, Alphabet, Meta, and others, even Palantir. They're seeing some of their worst days since 2020. Tesla alone tumbled 15% recently. And Goldman Sachs, one of the biggest names in the investment banking business, has cut its growth forecasts, citing tariffs and economic uncertainty as major risks. So even look at President Trump himself. He's been ruling out the possibility of recession. In a recent interview, he described the economy as being in a period of transition, which isn't necessarily the most comforting thing for US citizens to hear, and brushed off stock market concerns, saying you can't really watch the stock market. Fortunately, you kind of have to. But meanwhile, the Treasury Secretary Besson has warned of a potential detox period, also fueling the fire of people being concerned about what's going to happen, because the administration is trying to cut government spending, and there's another factor weighing on investor sentiment. But what should we take away from this? That's what I'm trying to figure out here. So markets clearly react to policy, not just presidents. And while Trump's policies are affecting markets today, past declines like Bush in 2001 or Ford in 1974 were driven by broader economic issues. And volatility is normal in political shifts. Fear and uncertainty always shape markets when leadership changes. We've always had a major change, but a radical change, really a step change from one potential way with Biden and the Democrats. Now we've got Trump and the Republicans with his own vision. But what happens next really depends on policy follow-through. We're in the early days, obviously only the first 50 days post-inauguration. But we're also seeing these defensive stocks are outperforming. Some safe plays like Johnson & Johnson actually gained during the sell-off as investors shift to stability. So have markets reacted significantly to past presidents? The answer is definitely yes, but not always in the way you'd expect. And what's happening now under Trump in 2025 is a sharp contrast to his first term. Tariffs and spending cuts driving investor fears. Question now is, are we heading for a recession? The R word is on everybody's lips, or is this just another short-term correction? It doesn't look great, and obviously we've got lagging indicators like GDP growth coming in soon, and we'll have a better idea of what's going on there. But one thing is for sure, this is the worst 50-day post-inauguration stock market reaction since George W. Bush in 2001. And that isn't what everybody wants to hear going into 2025 with so many global uncertainties. People want stability, people want to see the markets safe, so this is a concerning time to say the least.